Hello and welcome to our latest Insider interview. Today I'm joined by Georgina Brittain, who is Fund Manager of the JPMorgan Mid-Cap Investment Trust and the JPMorgan UK Smaller Companies Investment Trust. Georgina, great to have you today.
Lovely to be here.
So Georgina, to kick off, could you give us a run through of your investment process, explaining how you invest and what the sorts of qualities and attributes that you like to see in a company?
Absolutely. So, in one word, what we're looking for are the winners today, but obviously the winners in the future. And we have an investment philosophy that sort of sits behind everything we do. And what we're looking for is very straightforward. We're looking for attractively valued, high quality companies which have positive momentum. So if you kind of drill down into that, there are three areas that we focus on. So value, which I'm sure we'll talk more about, quality and momentum. And all of these for us are numerical. These are driven by numbers. So if we start with value, we look at obviously various facets, but the two things we really focus on, one is the humble PE, which we still find generally very useful. But the key focus for us is free cash flow. So we want companies that are not only making profits, obviously, but generating cash. And that's a very key metric for us. So that's our value factor that we focus on. Then when we talk about quality, every fund manager you've ever interviewed will talk about the quality of management, etc. And we, of course, look at that. But really, we're, again, talking about numbers. So we're looking at balance sheet. We're looking at things like return on equity, return on invested capital, because these prove that the quality is that the company has the quality that we're looking for. And then third, and perhaps foremost, we like to be exposed to all three of these in our portfolios, but probably the most important for us is momentum. And our key focus there is earnings momentum. So what we're looking for is companies that are doing better than the analysts' expectations. And ideally, they're doing better than companies' own expectations. So this is something sort of we focus on, every day, X number of companies reports results, and we're looking at how they're doing, as say, versus the market and their own expectations. And, but what we're looking for there and why we focus on it so much, because it does tell you, obviously, how the company is doing. But we're looking, we drill down into it. So, why is it doing better than expected? And if it's because they've got money in the bank and they're earning more interest than we expected, well, that's great. And they've got more cash than we thought they had. But actually, that's not driving real momentum. We want to know that the businesses are really trading well. That's a key focus for us.
And in terms of company size, what is there an upper limit for the mid-cap companies held in the mid-cap investment trust, and for the smaller company investment trust, is there a lower limit? And I also wanted to ask you, do you invest in AIM stocks?
Yes. So three questions there. So in terms of mid-cap, obviously our absolute focus is the FTSE 250, but we have a guideline that allows us to have 15% of the fund outside of the index. And we generally use that 15%. A large part of that will be FTSE 100 names, a few, but there will be stocks that were in the FTSE 250, and when they went into the FTSE 100, we chose to keep holding them. We've got a couple of examples in the portfolio. Two key ones would be JD Sports and Ashtead. And then the other part of that 15% parameter that we're given, we will invest on AIM. So we do have some AIM stocks in the FTSE 250. Obviously, they need to be of the right size to fit in with the remit. In terms of our smaller companies investment trust, we go pretty low because, of course, it is a closed-end vehicle. You're never going to have flows that mean you have to sell things you don't want to. And we go down to, we are a US bank, so we go down to $100 million market cap. That's our kind of low point. So then, as I said, in the mid-cap, we will have a couple of AIM names. But for our smaller companies investment trust, our benchmark is actually the Numis Smaller Companies plus AIM. We have obviously the ability, and actually a large number of names within the index are on AIM. And actually, as we speak today, we have, I believe we're close to 40% of the fund is on AIM. Deliberate choice. And generally for us, we're choosing them not obviously because they're on AIM, we're choosing the companies, and we're fairly agnostic as to whether they're main list or AIM.
So how much crossover is there between the two investment trusts? I noticed among the top 10 holdings, they share 4 companies in common. and they are OSB, Bank of Georgia, 4imprint, and Jet2. So, I mean, how much crossover is there?
So last time we officially measured this, which to be honest is a couple of months out of date, it was 40%, which compared to history is quite a high number. But the reason for that is because the FTSE 250 has fallen so far. There is more overlap in terms of the indices than we're very much than we're used to seeing in the past.
So those 4 companies that are in both respective top 10s, are they your highest conviction holdings?
They are very much within our top 10 highest conviction within in each portfolio. Yes, they don't get there by accident. As a company shows that and demonstrates that it's trading extremely well, we will tend to buy more. And then, of course, hopefully you get the share price appreciation. And we have, for both funds, the maximum size that we will hold for an individual name, we call it active, so obviously plus the benchmark, is 5%. So it's quite a punchy number.
And out of those 4 companies, is there one that you would particularly highlight at the moment?
Jet2, which is actually an AIM company. I'm sure you know it's the tour operator. We have known this company for a long time, as indeed most of our investments. What I'm about to say, a key theme will come out here. So Jet2 has been obviously hit by COVID, naturally. The share price, as you can imagine, fell very significantly because none of us were allowed to go on holiday. We bought a significant amount more. We didn't sell, we bought more because our view then, and absolutely proven, is that they had been gaining market share before and trading extremely strongly. We thought as soon as we were allowed to, we would all rush out and go on holiday, which is, again, very much proven to be the case. And it was very clear in our view, given what the management is doing, that they would be winning market share. And all of that thesis is playing out. So that is a very, as you heard, very high conviction holding. And it's very cheap. Again, that's a theme I'm going to come back to quite frequently because the market is cheap.
The UK smaller company market is under-researched. As a fund manager, does that give you a big advantage?
Absolutely, yes. And here I must give a shout out. So obviously I co-run both of these funds with my colleague Ketan Patel, but we also have Ed Heslett who works for us. And he is a fund manager, but for us, he is an analyst, and he's a fabulous analyst. And he specialises in the deep dive. He'll go into companies' house and look at 10 years of records, etc. So imagine what an advantage that is, where he does the deep dive on companies that are very badly followed. So we see that absolutely as a competitive advantage.
Are there any examples of stocks that you could provide where there's very little analyst coverage?
Absolutely, I can. We actually, absolutely sure about this point, we don't own any companies where there is no coverage at all, because as you heard, we do care about analysts' expectations in the market, and how are we to judge how well the company is doing apart from what they tell you without external coverage. So we don't own any that we wouldn't own any that have no broker. But we definitely own some with absolutely minimal. So again, one of our very large holdings in our smaller companies investment trust is Alpha Group International, previously called Alpha FX. They changed the name recently. And until literally about the last month, that had one broker covering it. And that is in our top 10. So, we're not afraid of that. But and a second one would be a Warpaint, the cosmetics company. Again, 1 or 2 brokers covering it. As companies get larger, and do well, which ideally is why we own them, generally you do see more coverage coming in. So we've had many examples of companies with, say, 1 broker, and now they get to 5, 6, 7. And we, in fact, we will encourage that, because by that point we've got a large position. Now we want more people to get the story and start buying and send the price up further.
You've talked us through your investment process, but in terms of sectors or themes, is that something that you think about at all?
In all honesty, we don't really think about sectors. Obviously, we check where we're at and we look, but sectors are a byproduct of our stock picking, very much so. We're all about individual companies. And in terms of themes, I think I'd say 2 things. So I've been investing in this area of the market for many, many years. And one thing I learned a long time ago is, given that our universe is finite and it's not that big, you can't invest in a theme because you're always investing in the company. So, there are amazing funds out there with, healthcare funds or whatever it is, cybersecurity funds, etc. Because they can choose, let's say they're global, they can choose from all around the world and, fantastic theme and great. But we could say, oh, we're really interested in cybersecurity, therefore we buy X. If X itself isn't executing properly, sorry, a lot of X's in that sentence, the shares will go down. It doesn't matter that you're right on the theme. It's always about the company and its delivery. So that's a kind of generic comment about this. But having said that, and I have touched on this a little bit already, what we're looking at the moment, life is hard out there. A lot of companies are performing extremely strongly, but we're all aware of the very many headwinds that corporates are facing. So we're looking, I've mentioned it before, but we're looking for the winners, and you demonstrate winning by gaining market share. And clearly a lot of companies are finding it very difficult, falling by the wayside. So we want to be in the ones that are, to put it one way, hoovering up the market share.
I also wanted to ask you about the increased trend of companies staying private for longer. Does that make your job harder when there's less companies listing?
It's a question that that comes up a lot at the moment, and clearly it's front of mind for a lot of people. But in our FTSE 250, there are always 250 companies, so not unsurprisingly. So in that index, and in our Numis Plus AIM index, there are actually well over 1,000 companies. So I know there are a lot of concerns about de-equitization. We are seeing a lot of takeovers going on in the mid and small cap space. Almost invariably one a week, let's say, and sometimes 5 a week, one a day kind of thing. So it's absolutely happening. But we absolutely do not have a problem with our opportunity set. It is very broad, and we always have, things that more new ideas that we're looking at and looking to invest into.
Georgina, thanks for your time today.
Pleasure.
So that's it for this episode. You can check out the rest of our insider interviews on our YouTube channel, where you can like, comment and subscribe. Hopefully, I'll see you again.